Good day, guys. Welcome back. So what we have here is S&P 500 or SPI stocks. Anyone you want to see it, yeah, see the same thing related. So now let's take a look at this S&P 500, right? So you can take a look at this movement. We want to know the strength for this. Clearly, we can see that this is a bullish move. Our price is up, and I've also included this 10-period moving average that will guide us. And we all know that once this price is above our moving average, then it is actually for us to look for a setup to actually jump in on this trade and go long. But we see that this price has been above our moving average. Now, of this recent move, we clearly can see that this price has broken below our 10-period moving average. So our price is currently trading below this 10-period moving average. But I believe this is just a pullback. I still see this as a pullback. So after this pullback, what do you expect? I'm expecting a bullish move. So the next day, which is 7th of December, we would want to see our S&P 500 or SPY stocks actually open and close bullish for the next day. So I will see the movements like this as, and let's start it from here, impulse move, and we will take this as a correction. Then here comes the impulse move, correction, another ice, right, correction, a new ice formed here. You can see correction here, now double topping here, correction. Now we've seen a new ice that broke with this previous ice, and here comes the correction. So you can see correction at this level, right? Price has come to test previously. So now that this price is at this level, what do you expect? I'm expecting a bullish move now. So on the 7th of December, right, which is the next day we are doing this analysis for, we want to see this price open and close bullish. Now let's see if this retracement or pullback is over by using our Fibonacci retracement tool, because this price is giving us a pullback, right, or is retracing. So we would want to know where it will get to before the retracement will be over. Thereby, we would use our Fibonacci retracement tool. Notice that this Fibonacci retracement tool does not work 100%, but at least it works within 70%. At least with that, we can be able to guide, it can guide us. So let's see it here. We take the highs here, and we take it from here. You can now see that it has dropped to a level of 23.6, right? And it broke the level of 23.6. Now we are seeing it drop to a level of 38.2. So once this S&P 500 drops to a level of 38.2, then be expecting a bullish move, because we all know that once price is retracing and it gets to a level of 23.6, we tend to see it give us that bullish move at a level of 23.6, because once price retraces, it tends to hit a level of 23.6 before it give us a bullish move. And if in case it drops further down, then we should see it drop to a level of 38.2. Once it gets to a level of 38.2, then we would expect a bullish move on this S&P 500. So there are two levels where price will get to before we have that bullish move. One, the first level is 23.6. The second level is 38.2. Since 23.6 has been broken, the next level we would watch out for on S&P to 500 is 38.2. So we would expect a bullish move at this level on S&P 500. And it also makes sense, right, for price to actually come to 38.2, because price has reacted to this level, right? We saw reaction here. Once price has come to this level, it went up by giving us a huge candlestick wick here. Price has also reacted to this level. Once price gets to this level, it gave us a pullback, right? So it makes sense for price to actually come again to hit this level and react to it, because I do see it now. If price has reacted to level previously multiple times and price is close to that level, then price will get to that level and react to it. So you can see that this price is close to this same level price has reacted to previously multiple times. So if this price can get to this level, we would expect a reaction by giving us a pullback, which will go bullish on S&P 500. So the next day, which is 7th, we would expect a bullish move. Now let's see what this 4-hour time frame says. So now let's see this 4-hour time frame. What does this 4-hour time frame say? So it makes sense for price. We saw a reaction here. Price gets to this level and it dropped, and we see a price reacted here. So you can consider, you can go ahead, you can consider this as a support if you want on a 4-hour time frame. You can see that price has reacted here. Price dropped. We saw that price came to this same level. It dropped and went up, right? Price also came close to this same level, reacted and went up. Now price is at this level again, so we'll be expecting a reaction at this level. So we want to go bullish on S&P 500. At least let's be able to take out this ice on our 4-hour time frame, which is a level of 4,000. So if you can grab 4,000 for the day, which is on the 7th of November on S&P 500, then it is still not it is still not bad. But before we actually go ahead to take this trade, we need to check our 30 minutes time frame, right? Before you actually go ahead to place your buy, you want to go to your 30 minutes time frame. If you can get a confirmation like you see multiple break of structure upward, then you can go ahead to buy. Because on this 30 minutes time frame, what can you see? You are seeing lower lows and lower highs. Price is dropping exponentially, right? So it is not a good opportunity to actually take a buy yet. So you can possibly wait for an highs, a pullback, a new highs being formed. Once the new highs has been formed, you can possibly wait for a pullback before you go ahead to take your trade on the 30 minutes time frame and go ahead to go long on S&P 500. Though S&P 500 for the 7th, we will be expecting a bullish move.